Welcome to TheoTrade. This is Don Kaufman. March 25th, 2020, a few minutes after the cash close here in the quintessential bear market rally. I mean, if you've been around trading for any period of time, this is what kind of like market makers, old school traders always kind of call the rip your face off rally. You know, in yesterday's trade, when they were talking about the movement in the Dow. I know I have the S&Ps on the screen here, but they're talking about the movement in the Dow, and it was such a substantial move to the upside. The only thing we could compare it to was 1933. Do you think that was a sign at that point? But come on, it's again, kind of a quintessential bear market rally. Hopefully people didn't bite too hard on it. There was a reason, okay, on Monday night's video that I was talking in detail about different sectors and kind of what sector's weak and what sector's strong, because it said get ready for kind of sector rotations, and that's exactly what we've seen. But when I talk about like this quintessential kind of bear market rally, listen, you know, markets are not always just a one-way ticket to the downside. By the way, this is a S&P chart. This is the S&P futures. It's a 30-day, again, a 30-day 1-hour chart, but it exemplifies, okay, the bear market rally. One of the first things, though, that is really, really surprising on this front, I mean, almost shocking, okay, you can't but have like two back-to-back days. Two back-to-back days is real difficult. And do you want to call this two back-to-back days to the upside? Do you really? Because the S&Ps, they're up some 32 right now. But I'll tell you what, even here in the after hours, 32 points in a marketplace that's this volatile, to me, it just doesn't even count as an up day. The Nasdaq actually backed off by 100 handles. The Dow is up. Russell, massively unchanged in the trading session. Nevertheless, it's a rip-your-face-off rally to the upside. Again, I hope that too many people didn't get caught off guard by this one. This is I say, this is what you're trained for, people. Okay, you had to be looking for this. Now, let's actually talk about a few really detailed aspects, okay, in the midst of this move to the upside. First and foremost, you got news coming out tomorrow. Okay, now before I jump in and get you to that news, I want to show you that, again, even in this wicked move to the upside, take a look at the advanced decline line by day's end. Again, the advanced decline line, almost a 50-50 shot out there inside of the S&P 100. But the reason that I'm bringing you over here is, let's jump to the calendar, okay? Because most people are probably aware of this. Again, you're probably aware of this. If you're not, you need to be aware of it, okay? It's the initial jobless claims that's coming out tomorrow morning. And I'm going to tell you right now, this one's going to hurt a little bit. So initial jobless claims, take a look, all right? Take a look again at some of the numbers that were expected on there. You really have to read through this. You're looking at 1 million. You're looking at 1 million. The previous was 281,000. Okay, that's 1 million expected. People are talking about 2 million, possibly even 3 million. Okay, this number could absolutely rock markets tomorrow morning. And I just wanted to make you aware of it because in the midst of a really heavy volatility event like we're in right now, it's very seldom, okay, that you get an economic data drop that's going to be, okay, the catalyst for another huge move. It's just a very rare thing. Like even GDP data in the middle of a recession, you get really bad GDP data. Everybody's like, yeah, we knew about that. Yeah, we expected it. But here's like the first major data point that isn't depreciated. And by depreciated, I mean every other data point that's come out in the last few days, everybody's like, yeah, but that didn't include like, you know, what we had in March. This jobless claims, okay, this does. All right, it's new unemployment claims. All right, and it's, again, week to week over here. They're looking at this stuff. This one's going to matter. It's going to matter big. It's going to be a big binary event for this marketplace. All right, moving past that, that is going to be bright and early in the morning, 1 hour before cash open. Again, 1 hour before cash open. So as I said, this has kind of been a quintessential bear market rally. Now, what are the things that I look for to distinguish, okay, that bear market rally? Well, there's a few different aspects I want to bring you into, okay? Here's one that I don't typically mention. Now, I talk a lot about volatility. I'm going to come to that here in just a moment. Let's actually talk about the dollar. Why? Especially in these evening videos, I don't really bring it up. If you look at the dollar lately, the dollar's been like the new VIX. Okay, buy the dollar, buy the dollar, buy the dollar. All right, the dollar backs off a couple of dollars here. But in this particular case, right, The point that I'm making is the dollar kind of has become a little bit of a safe haven right now. With your other sovereignties, you could be a hedge fund overseas, okay? You could be a money manager. Doesn't matter who you are, okay? They're diving into the dollar. Why? Because, and I've said this before, and I'll make this as eloquent as I possibly can. In the end, our crap, meaning the dollar, is usually more stable than their crap, which is their dollar. That could be the euro, okay? That could be, again, the yen. I can go on and on and on and all the different currencies and so forth. But in the end, people feel in the middle of a crisis, in the middle of a crash, that the dollar is probably the safer place to be. And it's a safer bet. So they put money into dollars, right? Okay. So we have this just wicked rally that occurs in the last 2 days. And the dollar, it backed off. Nominally, that doesn't bode well for your rally very much. So that's one sign. Okay, let's push that aside for a second. Next, let's actually look at the volatility contracts. The volatility contracts came down minimally. So the volatility contracts came down minimally. The irony is today we were having a huge up day. We were. We could have been somebody. Look at the ranges on today's trading session. This morning I woke up, we were all the way down here at like 2,400. Let's call it 2,400. Then we were trading 2,560. Then we were trading basically 2,460. Okay, we laughed, we cried, we rallied 160 points. We backed off 100 points. I mean, that was absolutely hideous. Do you realize, okay, in a period of about call it 15 minutes, we traded 25.50 all the way back down to, let's just call it 24.60. That's ugly, people. That's 90 S&P handles, and they're still selling it off here in the after hours. I remember basically we're going to be an unchanged kind of trading session here with the Dow kind of pumped up. Now, as I said, the volatility never really backed off all that much. You just saw, again, huge rally, and the volatility kind of meandered a little bit. The same thing is actually true of the VIX. The irony is a moment ago, I just said, the VIX, Don said the VIX, okay, and the dollar, well, they look alike. I was talking about the dollar and how the dollar didn't really back off. Well, the VIX and the dollar, they look alike over here. And that's where I'm like, Don's talking about the dollar, which is unusual. I'm not a big currency trader, but in this case, you have to look at it, okay? And you have to respect a little bit about what the dollar is saying, especially, okay, when it's falling in line pretty much with the VIX. It's like a secondary VIX. So again, in the midst of this kind of chaos, I don't ever trust like any one indicator. I don't ever look at like the S&Ps. I don't ever look at the S&Ps and say, I think they're going to go up or think they're going to go down based on what I see on this chart. Not even all the different levels in here. These levels are gravity points. Okay, they're gravity points. Speaking of gravity points, look at this pinging off these gravity points. It was a beautiful thing. By the way, that's a gravity point right there. You know what that is? And that's 2466, people. Look for us to possibly even head down to 2438 or 2411 as this evening kind of progresses. Now, okay, I'm not done, not by a long shot. So in the midst of some of the chaos of this marketplace, specifically in this quintessential bear market rally, all right, the market explodes to the upside. The volatility doesn't back off the way we think it should. Okay, what else? The dollar doesn't back off the way we think it should. Anything else on the screen? Okay. Gold has been just curious the last couple of days, the explosion to the upside. This is actually a lack of physical gold. But even today, gold didn't necessarily back off very much. If it's a risk asset, who knows? Now I'm going to show you something really interesting. Okay, before I go any further into this about volatility and so forth, I do want to show you a little bit about the bonds. Okay, now time out for a second. The bonds are not exactly helping me distinguish whether this is a the quintessential bear market rally or not. But the bonds, they just have me downright perplexed. Okay, there's absolutely no volume in those bonds. None. Scary. I know the bonds have contracted substantially in terms of ranges, right? The range expansion was huge back here, just huge. There's been minimal ranges the last couple of trading sessions. All of a sudden, nobody seems to want to trade bonds. Have to think, okay, did the movement of the Fed possibly influence this? The notes, it's the exact same thing. There's absolutely no volume trading right now. These people, these things were a rocking. rocking. Even last week, doing 2 million contracts a day inside of the ZN. I mean, the ZN, okay, in some days was actually exceeding the volume inside of the S&Ps. And all of a sudden, here in the bonds and the notes, the volume just completely dissipated. And I'm just going to tell you, when it's quiet, I'm scared. Hold me. I mean, really, like in this case, right, this is going to be some pent-up aggression. Possibly thinking, all right, and this is just a thought, it may have something to do with this jobs number coming out, the initial jobless claims tomorrow. I don't know exactly what to make of it, okay, but I'm going to tell you right now, we are far from done in these S&Ps. This volatility isn't going away. When all of a sudden, okay, everybody kind of contracts and doesn't, like this isn't just like, okay, things kind of die down, we're going to be okay. This is them, they're actually avoiding, okay, bond positioning right now, and I don't have a reason why. All right, on this front, so we talked again about the dollar, we talked about the VIX, we talked about the dollar being like the VIX, we talked about the bonds, okay, and the fact that there's just no volume in the bonds whatsoever. I mean, this is like summer trade in the bonds. Open up a pretty significant chart time frame. When I talk about summer trade in the bonds, come on, we're one of the most volatile markets in the history, okay, of this business, right? Volatile market in the history of this business. This is where volume happens to be, right there, okay? Just where it was in July and August, okay? Even September did better than this, but I'm telling you, that's how dead the bonds happen to be, okay? Yeah, dangerous things going on. Influence from the Fed? Quite possible, quite possible. But the banks, they just trade. They trade bonds. All right, down the list of the usual suspects over here to the VVIX. Once again, the VVIX is confirming what we saw in the dollar. It's confirming what we saw in the VIX. The volatility just refuses to back down. Now, on a sector-by-sector basis, and this is what I was covering on Monday night, okay? We talked about the financials just getting downright murdered. And they have. The financials have been just downright hideous. What else has been hideous? And I pointed this out, of course, on Monday night. The XLE, okay? We were looking for a bounce. We got a bounce. Okay. And these are substantial bounces. I mean, again, on Monday night, upon recording, this thing's down 60%. It's down about 52% right now. So interesting rotations today. Okay. And I'm just going to kind of highlight this. Let me scroll back up here and highlight specifically the rotations that I'm talking about. We rotated into financials. We rotated into, okay, the energy sector. What did we do? We absolutely crushed technology. And I'm telling you, okay, that was precisely the game plan that we actually brought before you on Monday. We said, like, listen, they're going to go after tech. Speaking of which, we put on some positions specifically in tech. You know, when you're trading this stuff, you know, words don't do justice. You got to execute upon this. Okay, so I put a bearish spread on into Amazon. And frankly, I have been chomping at the bit to try to get short inside of Microsoft over here. I just haven't had another good opportunity. So for right now, I'll just take the Amazon position. For those of you that know this, I've closed and opened and closed a couple of different Amazon positions profitably. All of them because we were just channeling back up and down, I should say, in both Microsoft and on Amazon. This chop over here is beautiful for in-out spreads. Okay. For a period of time, you do see a bid under the financials. Now, the reason I'm bringing the financials back into this, okay, again, my expectations, tech has to take, it has to get taken out to the woodshed, which very well is likely happening right now, okay, but if we're going to start to see some, again, more severe sell-side activity, make no two ways about it, the financials will once again be involved. On a percentage basis, they're not going to get hit as hard. But I'll reiterate precisely what I was talking about the other night. And that's this. When you look at the QQQ and you look at it a year-to-date percentage, and it's only down 15% on the Qs, right? You look at the spiders, and the spiders are down 24%. You look at the IWM, and it's just been outright slaughtered in the IWM, down some 33%. It's time to see the big sell side activity. Yeah, that's coming to a technology company near you. Look for Facebook, okay, Google. Why am I singling those out? Advertising, okay? Very easy to single out. Again, any bounce inside of Microsoft, still looking for a short in Microsoft. One other position I put on, yeah, I actually took a bearish in-out spread in Boeing today. Again, a bearish in-out spread in Boeing. Why? Okay, well, simply because too far, too fast. Listen, all the positions that we're talking about here on a day-to-day basis, I'm covering live at TheoTrade. This is kind of the game plan. This is kind of what we've been planning for some of these sector rotations, okay? And the proof pretty much is in the P&L on a day-to-day basis. We're still progressing forward, even though the marketplace has a little bit of a bounce, technology is down, but that's exactly what we were looking for. With that, call it an evening. I'll be back trading all throughout the course of, the rest of the week. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.